Welcome back to Prop News Time. Here are the headlines for the day. Madhya Pradesh secures over INR 3.7 lakh crore investment at Global Investors Summit 2025. Madhya Pradesh attracted investment commitments exceeding INR 3.7 lakh crore at the Global Investors Summit 2025 in Bhopal. Adani Group pledged INR 1.1 lakh crore across multiple sectors, with discussions for an additional INR 1 lakh crore. NTPC committed over INR 2 lakh crore for renewable energy projects, while Reliance Industries announced an INR 60,000 crore investment in biofuels. Other firms like Dabur and Torrent Power also pledged investments. The influx highlights the state's growing appeal for investors, driven by proactive policies, resource availability, and improving infrastructure, reinforcing its role as a key economic hub in India. Navi Mumbai Municipal Corporation approves budget for 2025-2026 with focus on development and sustainability. The Navi Mumbai Municipal Corporation (NMMC) has approved its revised budget for 2024-2025 and the original budget for 2025-2026 with a total deposit of INR 5,709.95 crore and an estimated expenditure of INR 5,684.95 crore, leaving a balance of INR 25 crore. The budget prioritizes financial discipline, infrastructure, education, healthcare, and sustainability. Tax rates remain unchanged. Measures such as efficient revenue collection and innovative funding strategies aim to boost municipal finances. Environmental initiatives, improved healthcare facilities, and expansion of civic services reflect NMMC's commitment to making Navi Mumbai a thriving, well-planned, and green urban center. Mumbai property deals. Zara exits Flora Fountain store over high rents, Pernia's pop-up shop, to take over INR 36 crore lease. Spanish fashion giant Zara has closed its 51,300 square feet flagship store at Mumbai's Ismail Building due to rising rental costs, which had surged to over INR 30 crore annually. The store, operational since 2017, was housed in a restored 119-year-old heritage structure. Luxury retailer Pernia's pop-up shop, owned by Purple Style Labs, has taken over the space with a 5-year lease starting at INR 36 crore per year. This shift reflects changing retail trends in Mumbai, where high operational costs and increasing e-commerce adoption are prompting brands like Zara and Marks & Spencer to rethink their physical presence. Pune Real Estate. Panchshil Realty acquires 2 industrial land parcels in Navi Mumbai for INR 615 crore. Gramercy Info Park, Pavatlothrid, a subsidiary of Pune-based Panchshil Realty, has acquired 2 industrial land parcels in Navi Mumbai's Ghansoli area for INR 615 crore, according to propstack.com. The first parcel, spanning 73,600 square mi in the TTC industrial area, was purchased for INR 235.34 crore, while the second, covering 118,000 square mi, was acquired for INR 379.65 crore. Panchshil Realty, known for luxury developments, has previously partnered with the Trump Organization for Trump Towers in Pune. The TTC industrial area has experienced a 9.05% rise in property values over the past year. This acquisition highlights the increasing demand for industrial and commercial spaces in Navi Mumbai and strengthens Panchshil Realty's presence in the Mumbai metropolitan region. Jaipur Housing. JDA announces new housing schemes in Jhotwara, Basi, and Daulatpura. Following an overwhelming response to its ongoing residential projects, the Jaipur Development Authority, JDA, is set to introduce 3 new housing schemes. These developments, located in Mansharampura, Jhotwara, Kardhani, Basi, and Bainad, Daulatpura, will feature both residential and commercial plots, with 850 residential plots available. The application process is expected to be announced in the coming days. The move comes after JDA's earlier projects, Atal Vihar, Govind Vihar, and Patal Nagar, saw nearly 1,75,000 applications for just 756 plots. Given the city's expanding urban landscape and a history of high demand for JDA plots, these new schemes are expected to attract significant interest from home buyers and investors alike. CREDAI-MSHI extends CSR support to Mumbai Mobile Crash, promoting education and well-being of construction workers' children. As part of its commitment to social responsibility, CREDAI-MSHI has extended its support to Mumbai Mobile Crash, an NGO dedicated to the education and welfare of children of construction workers. CREDAI-MSHI has contributed a CSR grant of INR 2,01,000 along with play kits to create an engaging and supportive environment for these children. The announcement was made during the MCG Premier League, MPL 11, a 3-day cricket tournament reinforcing the importance of combining sportsmanship with social causes. CREDAI-MSHI's leadership highlighted the significance of providing equal opportunities to underprivileged children, ensuring their overall development. The initiative also encouraged industry-wide participation through sponsorships, fostering inclusivity. As a key player in the real estate sector, CREDAI-MSHI continues to integrate social responsibility into its growth strategy to create a sustainable and equitable society. Chandigarh. CHPB launches demand survey for Sector 53, Self-Financing Housing Scheme. The Chandigarh Housing Board, CHB, has launched a demand survey for its self-financing housing scheme in Sector 53, accepting applications exclusively on its website until March 3. The scheme includes 372 flats across 3 categories. Applicants must submit a deposit, which CHB will adjust in the earnest money deposit upon launch. The project, delayed since 2018 due to high costs and low demand, has undergone revisions to improve affordability. Officials recently presented the proposal to the Chief Secretary. CHB will proceed only if it receives sufficient interest and necessary approvals, aiming to offer long-awaited housing opportunities in Sector 53. Karnataka. Kalaburagi authorities raise building height limit to 15 meters and announce plans for a 500-acre township. The Karnataka government has approved increasing the residential building height limit in Kalaburagi from 11.5 meters to 15 meters, addressing rising population density and land scarcity. KUDA's proposal, submitted in March 2024, was finalized on February 18, 2025. A new 500-acre township is also planned to decongest city areas. Kalaburagi's growth, driven by improved connectivity via its airport, has attracted investment. Additionally, CM Siddaramaiah announced INR 1,685 crore for smart city development, INR 200 crore for infrastructure, and INR 1,000 crore under the Kalyana Pata scheme for rural roads, positioning the city for significant urban transformation. Punjab legislators push for increased MyG funds for rural housing. A Punjab Vidhan Sabha committee has recommended increasing financial aid under Pradhan Mantri Gramin Awas Yojana, PAMIG, saying INR 1,20,000 is insufficient to build good homes due to rising construction costs. The report highlighted that another central scheme offers INR 2 lakh for the same purpose. It urged the Punjab government to request the centre for a higher amount. The committee also recommended involving MLAs in the selection of beneficiaries and expanding the scheme to cover more villages across the state. These measures aim to improve rural housing support and ensure eligible families receive adequate assistance for better homes. Vasai Virar. City Municipal Corporation demolishes 41 illegal buildings in Vasai East, the Vasai Virar city. Municipal Corporation, VVCMC, demolished 41 illegal buildings in Vasai East's Agarwal Nagari over 22 days, displacing around 2,000 residents. The structures were built on land reserved for public utilities like water and sewage treatment plants. While activists criticize selective enforcement, the Bombay High Court has asked the state and VVCMC to present a rehabilitation plan. The civic body defends the demolitions as essential for urban planning. This case highlights the conflict between regulatory enforcement and residents' rights, raising concerns over the consistency and transparency of actions against unauthorized constructions. Maharashtra CM announces waiver of 8.5% interest on premium for self-redevelopment projects. Maharashtra's Deputy Chief Minister, Devendra Fadnavis, has declared an 8.5% interest waiver on the premium applicable to self-redevelopment projects. This will be valid for projects submitted until March 2026. The government has permitted the premium to be paid in installments. But the Brihan Mumbai Municipal Corporation, BMC, levies an 8.5% interest on these payments. The waiver aims to facilitate housing societies undertaking self-redevelopment by reducing financial burdens. Currently, societies opting for self-redevelopment on government-leased land must pay a premium equivalent to 5% of the ready reckoner value, with an option to make payments over 3 years. The initiative is expected to encourage self-redevelopment across Mumbai and other regions in the state. Delhi Property News. MCD launches house tax waiver scheme with full exemption for properties up to 100 square yards. The Municipal Corporation of Delhi, MCD Sarage, has introduced a house tax waiver scheme allowing residents to clear their 2024 to 25 dues to receive full forgiveness of past outstanding taxes. Properties up to 100 square yards get complete exemption, while those between 100 to 500 square yards receive a 50% reduction. Additionally, 1,300 housing societies will now get a 25% rebate. The initiative aims to boost tax compliance following a decline in collections last year. MCD is also integrating tax payments with utility services and geotagging properties to modernize the system and enhance efficiency, ensuring better revenue generation and civic development. Apollo Global Management to acquire Bridge Investment for $1.5 billion. Apollo Global Management will acquire Bridge Investment Group in an all-stock deal worth approximately $1.5 billion, strengthening its real estate portfolio. Bridge shareholders will receive Apollo stock at a 45% premium, driving a surge in Bridge's pre-market trading. The acquisition enhances Apollo's real estate equity and credit capabilities while integrating Bridge's $50 billion asset management expertise. Following the deal's expected closure in the third quarter, Bridge will operate independently within Apollo, with Bob Morse leading its real estate equity division. This transaction aligns with Apollo's long-term growth strategy, reinforcing its leadership in alternative investments amid rising market demand. Hyderabad civic body serves red notices to 1.5 lakh commercial establishment defaulters. The Greater Hyderabad Municipal Corporation, GHMC, has issued red notices to 60% of commercial establishments to recover overdue property taxes. Despite repeated reminders, 1.5 lakh properties have defaulted for 2 to 3 years. Additionally, GHMC has served distress warrants to 75 properties with decade-long dues. With unpaid taxes exceeding 10,000 crore Indian rupees, the corporation faces financial strain. Efforts include official notices, SMS reminders, and legal action against defaulters. GHMC has collected 1,470 crore Indian rupees this fiscal year and aims to surpass 2,000 crore. It will conduct Property Tax Parish Karam every Saturday until March 29 to resolve taxpayer grievances. India's e-commerce sector to hit 550 billion US dollars by 2035, driven by digital expansion. India's e-commerce sector is on a rapid growth trajectory, with Anarock projecting a 15% compound annual growth rate, reaching 550 billion US dollars by 2035, from 125 billion US dollars in 2024. This expansion is fueled by rising internet penetration, smartphone adoption, and digital payments, along with growing demand from Tier 2 and 3 cities. India's overall retail market is also set to triple to 2,500 billion US dollars by 2035. However, mall supply struggles to keep pace with demand, with vacancy rates dropping to 8.1% in 2024. Retailers are now expanding into smaller cities, driving future growth in both online and offline retail. Pune leads home loan disbursals as high-value loans rise in fourth quarter of 2024. Magic Loans reported a sharp rise in demand for high-value home loans in the fourth quarter of 2024, with the 50 lakh to 1 crore Indian rupees segment accounting for 36% of total disbursals. Pune led with a 30.6% share, followed by Hyderabad at 22.6%, Bengaluru at 17.3%, and Gurugram at 14.2%, which recorded the highest average loan size. The surge is driven by the Reserve Bank of India's recent rate cut, rising property prices, and government-backed initiatives like the Swami H Fund. With home loan disbursals doubling since early 2024, India's housing market is set for continued expansion, driven by increasing affordability and demand for premium properties. ICRA, Indian firms to achieve 7 to 8% revenue growth in March quarter amid increase in government spending. Indian firms are expected to post 7 to 8% revenue growth in the March quarter of the current fiscal year, driven by a pickup in rural demand and higher government expenditure, says rating agency ICRA. The growth comes on the back of a consistent revival in earlier quarters, with revenue growing 6 to 7% in the December 2023 quarter. Operating profit margins are also anticipated to remain at 18.2 to 18.4%, as has been the case in recent months. Private capital spending, however, is still cautious because of geopolitical tensions, although investment in high-growth areas such as electronics, semiconductors, and electric vehicles is anticipated to persist under government-initiated production-linked incentive schemes. Rural demand, which was subdued in early 2023, is expected to stay robust in the first half of 2025, led by healthy Kharif crop production and supportive Rabi season conditions. A well-distributed monsoon in 2025 will be critical in maintaining this growth. Gurugram Real Estate IKEA opens 180,000 square feet distribution center in Gurugram to boost North India deliveries. IKEA has launched a 180,000 square feet customer distribution center (CDC) in Gurugram, enhancing order fulfillment efficiency across Delhi NCR. Developed with Rhenus, the facility enables 24-hour delivery for over 7,000 IKEA products and is strategically located 35 kilometers from the airport for seamless last-mile logistics. Aligned with IKEA's sustainability goals, the CDC features eco-friendly initiatives like paper pallets, rainwater harvesting, and a 100% electric vehicle delivery target. With 10,500 crore Indian rupees invested in India, IKEA plans online sales in Delhi NCR by 2024 and physical stores in Gurugram and Noida by 2025, further strengthening its market presence. Yaida plans to acquire additional land near Jawar Airport for development. The Yamuna Expressway, Industrial Development Authority, YAIDA, plans to acquire 5,000 hectares near Jeevar's upcoming international airport to drive real estate growth. The Uttar Pradesh government is developing key projects, including a film city, medical device park, logistics park, and data campus park. Authorities have prepared a master plan for 2041 to meet rising land demand. Of the acquired land, 1,040 hectares will support industrial expansion, while 178 hectares will house a logistics park. These initiatives reflect the government's commitment to economic growth, attracting investments, and positioning Uttar Pradesh as a pivotal hub for trade, commerce, and infrastructure development. Decoding the long-term capital gains tax on property for high-net-worth individuals and how real estate developers can help navigate the complexities. The Indian tax system, particularly capital gains tax, has undergone significant changes in the union budget. 2024 to 2025, impacting deduction limits, tax rates, and exemption rules. Long-term capital gains tax now applies to property held for over 2 years, with the exemption limit increased to Indian rupees 1,25,000 and the tax rate raised to 12.5%. To minimize long-term capital gains, tax liability, taxpayers can reinvest gains in affordable housing, Section 54 EC bonds, or diversify into commercial real estate and real estate investment trusts. Expert real estate consultants play a vital role in guiding investors through tax-efficient reinvestment strategies, ensuring compliance and maximizing financial benefits. Germany's housing crisis worsens as building permits hit lowest levels since 2010. Germany's residential real estate sector is facing a crisis as new building permits dropped to 215,900 in 2024, the lowest since 2010. This 16.8% decline, driven by excessive bureaucracy, high construction costs, and rising interest rates, is worsening the housing shortage. The German Property Federation warns that approvals may fall further to 210,000, jeopardizing the government's annual target of 4 lakh new homes. Industry experts are calling for regulatory reforms and financial incentives to revive construction. Some local authorities are piloting streamlined permit processes, but whether these efforts can reverse the decline remains uncertain amid ongoing market challenges. Shanghai Land Deal, UOL, Singapore Land, and China Jinmao invest USD 1.23 billion. A consortium of Singapore Land, UOL Group, and China Jinmao Holdings has acquired a prime residential site in Shanghai for Chinese yuan 8.96 billion, USD 1.23 billion, demonstrating confidence in the city's long-term growth potential. China Jinmao holds a 90% stake, while UOL Group invested Chinese yuan 358.57 million as part of its expansion strategy in China. The acquisition aligns with UOL and Singapore Land's diversification goals, leveraging China Jinmao's local expertise. Despite challenges in China's property sector, the deal reflects a strengthening partnership between Singaporean and Chinese developers and reinforces belief in Shanghai's real estate market stability. Kuwait expands property rights for expatriates and businesses. Under new real estate law, Kuwait has enacted landmark reforms to its property ownership laws, expanding expatriates' rights under regulated conditions. Law number 7 of 2025 allows Arab nationals inheriting property a 2-year period to sell, while those inheriting from Kuwaiti mothers face no restrictions. Listed companies and licensed investment entities can now acquire real estate, provided it is used for operations or employee housing. The changes lift previous bans on foreign-owned firms holding property, boosting investment while maintaining oversight. Strict measures prevent speculative trading, ensuring alignment with Kuwait's economic goals. These reforms mark a significant shift, fostering market growth while preserving national interests. That's a wrap for today. Tune in tomorrow for the latest headlines.